Good morning, everyone. It's a very nice day. It's 10:11 of 2012 time, 6:17 a.m. Pacific Standard Time. We're gathered here to enjoy the $6 gap on Apple. We featured Apple the intraday right around, it hit bottoms intraday. It was close enough, 623.55 or whatever. But it didn't matter. What mattered was that was the time to own it, and it was time to be in the super gap. What I have also for my MMTs is the 650 PV line here, which just like yesterday when we were trading off of this pivot line support, we were really taking the moves using our other application. This is just a standard chart, and we're using our high frequency trading application model in the entries and the exits. So the same rule will apply here. And what we're going to do is that we do have and been trading lots of these 635 calls. There are 630 calls that we own as well. Today, based on this gap, we're going to go to the 650 put, and the reason why MMT here is the 650 put. Yes, this is before the market opens in 12 minutes. It's 6:18 a.m. Pacific Standard Time. We make markets, and we know you want our prices because you do. Who wouldn't? The problem is, do you know how to get them like we do? Probably not. We're market makers. We'll teach you how to get them. We'll be happy to do that. In a high frequency model, we're going to mark these bids down at 260 to buy 10 and 290. That's $8. They close at 1090. That means that whoever owned these puts against Apple are going to lose their shirt. And I would be a buyer down at the lower end of the marketplace because that's exactly where I would make my entries, based on that pivot line on a 60-minute chart being resistance. What am I looking for out of this trade? I'm only looking for what it would normally do, give $2 on the put side on once we gap up as we are, and we run right here. This is where the major downtrend started. Right here where my pointer is, MMT. And you can see how I'm going back and forth with that pencil there. And that's going to be that wall of resistances, just like yesterday in price. You have your pullbacks and you engage with new entries based on that bottom upside trade. See, the short side already got to the bottoms where we had to own it here. And the thing about it is, you have a vice presidential debate this evening, and this is a pre-market gap on Apple Computer in pre-market from the close. So one of the things that we will feature is knowing when to sell. We bought these 680 calls that we had told people about more than once, but we had to own these overnight. So if we want to add to these, we can add what the cost basis, because we would have to pay up higher now in price on the 680s. And same thing over here, MMT. We own these calls here on the opening bell, down here toward the low of 850. They're going to gap up in value, and I'll put a limit order to sell at $14.50 on an exit, and the market will open up in 9 minutes. Knowing when to exit is the key to prosperity. Most people on a percent level, 99.9%, will barter with their profits. And then their profits, when stocks reverse and volatility and price happens, they don't take their profits, and then they kind of just come down in value. You have to know when to exit. So we're going to have an exit there. And based on the gap, I'm going to try to do I'm going to try to steal an entry order right here, because I'm already at 8.5. And if I put a limit order out now to buy at 1050, yeah, that's a premium gap. But I would buy more contracts at 1050 to go with my 850 entry. So therefore your costs will be down and you'll be up, and then we'll take these up to the higher prices and do the exit. We have 8 minutes to the opening bell. I've already instructed other MMTs how to exit the 630 calls, and we're going to get a home run out of these and put these out at 18.5 on the 630s. On the 680s, well, based on that resistance level, is the same rule would apply here. I would add to my position. They're going to gap up in value. Yesterday high was 1480. 1225 was the close. Within the trading range, if it's a sell gap, they'll pull the contract back and snap that entry. So what I will say on this one is put out 5 more of these. They're going to gap up in value and put them out 5 more at 1370 to buy. And I will see everyone and get those live orders out there. You got 7 minutes to the opening bell. Okay, that's the limit in order. And we have a limit out order of around 1770 on the upper end. Does it mean it has to happen all in one day? No, but that it will get to those price levels because the contract was deflated and we bought it. Yes, we did. These same contracts were $45 at one time. Yes, they were. And we own them. Not more when we own them more than one time, and we got other ones. But I can tell you right now, we can be greedy with that exit here, 1770, and that new entry at 1370 on 5. They're going to gap them up in value. We have to try to steal the bid price from the high frequency trading option machines and the public.